Welcome to the latest edition of International Tax News. I'm Doug McHoney, PwC's International Tax Services Global Leader. In this edition, we cover selected tax updates from around the world, including my favorite topic, Pillar 2. If you would like to go in-depth on similar topics, check out the Cross-Border Tax Talks podcast in video on YouTube or in audio wherever you find your podcasts. Now turning to our current edition. First, the Turkish government submitted draft legislation on July 16, 2024, amending the tax laws that introduced Pillar 2. Under the proposal's current draft, the IR and the QDMTT will apply for fiscal years starting from January 1st, 2024, while the UTPR will apply for fiscal years starting from January 1st, 2025. The draft legislation also contains both a transitional safe harbor and permanent safe harbor. Next, the Luxembourg government on June 12, 2024, submitted a draft law to amend their Pillar 2 minimum taxation rules. The amendments proposed by the draft law clarify several points for Luxembourg businesses, such as the grandfathering of certain tax losses on shareholdings, consolidation rules, and the treatment of deferred tax liabilities of Luxembourg reinsurance entities. The draft law is still subject to review by the Luxembourg Council of State, and it remains to be seen whether the final law will consider the June 2024 OECD administrative guidance that excludes securitization vehicles from the scope of the Luxembourg QDMTT, as well as the December 2023 OECD administrative guidance that contains the safe harbor for non-material constituent entities. Finally, Canada's Digital Service Tax Act received royal assent and was made available on the Orders in Council website. Accordingly, the digital services tax came into force on June 28, 2024. The digital service tax will be effective for the 2024 calendar year and will apply retroactively to in-scope revenues earned since January 1st, 2022. The DST is a 3% tax on Canadian source digital services revenue earned by large domestic and foreign taxpayers, and it applies on a calendar year basis. The first payment of the DST liability will include the DST on in-scope revenues earned since January 1st, 2022, and the earliest that will be due is June 30th, 2025. Thank you for reading PwC's International Tax News. I look forward to speaking with you again on the next edition or on the next episode of the Cross-Border Tax Talks podcast.